You're an Nvidia investor. What is your take on the quarter? Did it even top your expectations? There were so many whisper numbers and expectations even above the estimates.
Good morning, Frank. Well, Nvidia certainly did top my expectations. When you have this type of growth on both the top and bottom line, and the prospects for the potential outlook of growth exceeding Wall Street expectations, I think this is just the Goldilocks type of earnings season here. AI is the biggest innovation of our time, probably at least in the next decade or so, and Nvidia is certainly going to be the beneficiary there. So very happy with what I heard yesterday. I also like the stock split. I think it makes it tradable for retail investors. And usually stock splits, things like this don't matter. You just kind of change the share price and the outstanding shares, but your notional is the same. In this case, I think it has such a popular appeal that it actually is going to drive demand for additional stock purchasing from the retail community. So I really like that too.
So here on CNBC, we often say the stock split doesn't really matter, but it really seems to matter to retail investors because we often see a stock move higher. So maybe nowadays it does matter. You know what else matters? Valuation. So I was just looking. According to FactSet, Nvidia was trading at about 61 times forward earnings just a year ago. Now it's at 33 times. So Sylvia, as an investor, I want to ask you, with this kind of immense growth, is Nvidia basically cheap now in your mind, or is this still pretty lofty?
Yeah, I think it's certainly cheaper than most of its peers. So the multiples have come into a place of a reasonable level for investors to consider buying the stock. What happens though when a stock runs up like this is a lot of investors get, a little bit turned off that the price has just gone too high and they come off they don't come off the sidelines there. And I think the stock split is going to change that. So now you have a reasonable valuation and you have a share price that's going to be lower. And, arguably, again, this is the company that's going to represent the AI trade and innovation. And so, you want to have participation in this stock, whether it's through an ETF, whether it's directly, you want exposure to Nvidia in one way or another now.
All right, Josh, don't worry. I didn't forget about you. I want to get your take on the quarter. And also, you gave us your notes. You were actually looking at the S&P overall, saying it's kind of frothy right now. It's trading at 22 times forward earnings. You were looking at the S&P equal weight at about 17 times forward earnings, saying that looks a little bit more reasonable. But I do want to ask you, why would you want to limit your exposure to an Nvidia, a Microsoft, or an Amazon, these big stocks that are really driving the market if you go with the equal weight?
Well, it's not about going with the equal weight. It's more about, the fact that obviously, we talk about the S&P as the market, and that makes sense, but it's market cap weighted. And I always think to myself, very few people outside of those that invest in index ETFs, but very few people would construct a portfolio from scratch on a market cap weighted basis. So absolutely, Nvidia, there's nothing not to like. It's an incredible company. It's the real deal. I would just say that, when we look at the market buying the S&P, it's not as exciting as it might have been a year or so ago. I think what is exciting is, the S&P equal weight, which is more likely how someone might construct a portfolio, trading at about 16 or 17 times forward earnings. That's a lot more attractive to me as someone who, is helping build portfolios from the ground up with individual stocks and not just looking at,
Understood.
a few big,
Understood.
big names.
You have some concerns about over-concentration. Even though these stocks are driving the market, you want more exposure more broadly. So I want to ask you also about the Fed minutes, some of the comments from Fed speakers, Josh. Also, some of the comments we're getting from Jamie Dimon. It seems like we're having what some people call a vibe session. I'm stealing a term from Joyce Chang from JP Morgan. People don't seem to be that excited about everything that's going on, even though the markets are doing very well and the economy seems relatively strong. What was your take on what we heard from the Fed from those minutes?
It's strange because I do feel like the Fed, it's always important. I think in this earnings season where we saw some nice growth in revenue and earnings and some margin expansion, I feel like the Fed is a little bit less front burner. I think that what was said yesterday in the minutes, I don't know, I think my Labradoodle kind of knew that that's what they were going to say. I don't think anyone was thinking that they were going to change their mind and say, oh, we're nailing inflation. I think that they can always go that way in the future, but for now it makes sense that they're concerned and that they don't have a lot of conviction that they've dealt with it fully. So I don't know. I think the market was looking for a reason to react. And, we saw a big sell-off toward the end of the day, but I don't know if a lot's changed. I think that the tone from the Fed has been relatively consistent.
Josh, I got to say, if your Labradoodle understands English, you might be wasting your time with these stocks. That's the investment right there.
A little bit.
Sylvia, on a serious note, you gave us a few of your stock picks, IBM, Microsoft, Amazon, also INQ, really playing off this AI trade. As you look at these stocks, are there certain ETFs that you would suggest playing to kind of just diversify a bit? Because we keep hearing that oftentimes the stocks that are prominent at the beginning of a revolution don't necessarily have a place later. The stocks you gave us are, for the most part, the leaders right now. Do you see that changing? Are there ways to kind of diversify, kind of on Josh's theme, so you get more exposure to winners in the future?
Yeah, exactly. And the ETF idea is a great point. So I think when you're thinking about themes and innovation and disruptive technology, there can be many winners that are right now sleeper small caps that are impacted by rates, but may essentially thrive if these innovations come through. So, I'm big on the AI revolution is now, the next revolution is quantum computing. And then what will feed into that are companies like IonQ, quantum computing company. Quantum computing actually speeds up the processing and the ability to process complex data, which benefits AI, and AI benefits quantum through error optimization and, essentially making the data cleaner as well within the quantum process. And so I think if you merge these two technologies, the future of AI becomes more robust. And so looking at ETFs like quantum ETFs, 5G for tech connectivity, things like this that'll drive that innovation are really interesting right now. And those companies, although they're the leaders now, I think the good thing about them is that, look at IBM, for example. That's a company that we weren't really so hot on for the last couple of years. It's
Right.
sort of just there. And now they're leaders in quantum computing. So, don't kind of count out the big guys here with the strong balance sheets that are actually forward thinking.